Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, September 21st, 2020, time 5:45 p.m. Central Time, the last day of summer. Tomorrow we're officially into fall. So that summer came and went like that. We've all been locked up. The market today was scared by COVID. Any way you want to cut it, when you hear that London is considering the whole thing now another 2-week shut-in, when you see what's going on in India, Spain, the cases are overwhelming again. So it has come back. We see it in America in our college towns when the kids, they say, nah, don't worry about it, we're fine. But then they go and you see the what's going on in the schools, you get a sense of it. Ruth Bader Ginsburg, we'll miss her, and simply put, that opens up another complete craziness for the election that is coming up. So that's one area. I just saw, I think it was Wisconsin, said they're going to count votes 6 days after, if you mail them in, the November 3rd election. Well, how are you going to get an election result at night if more states do that? I don't know. There's just so much weighing on the market that today, when the market started breaking, and September is often an ugly month for the stock market, it just continued to break and break hard. You went down to key numbers. Let's talk about them. When you look at the weekly chart, you're down right now from this high approximately 200 points. The high close was 34.85. Right now you're 32.75. So you've had a sizable reaction in the market. Not a 10% break, but a sizable reaction. And by the way, on this chart, I'm still looking at support at the 32.45 area, which is the 18-week moving average of closes. When we take a look at a daily bar chart, you can see how the market's broken down here. Now, if we remove this, is there anything different on the chart? There really isn't. The market had broken down, gone sideways, and the question now is, does it pop back up here, or is it just add another leg, so to speak? It seems to be reversing all the action we had here the exact opposite way. 3,200 is a big support area. You can see how it fit in right through this area. So that's one of the things I'm looking at. This is tonight's action with it. When we take a look at swing lines, we have a pattern of a higher high and a lower low. That is not a trend. A trend, if it were down, has lower highs, lower lows, an uptrend, higher lows, higher highs. You're not trending. What else? The rallies that once we got under the red line, the 18-day moving average of closes, rallies have not been able to carry back over it. So we've had a downside bias that went into place at the beginning of September, and it is still here. So it's almost about, 3 weeks old. So that's been going on for a while. Let's assume the market wants to break more. You have two areas of support. 31.75.5 is the 100-day moving average of closes, and the 200-day is back at 30.91. When you take a look at Bollinger Bands, what is my theory? My theory, and let's remove today, my theory is and remains that the first time you hit a Bollinger Band, wherever it comes in, that's where pros start taking money off the table. I don't know if they're taking it all off there or they're taking off portions, but if I'm them, or if I were their mentor, if you're taking money up, you're gonna have a real tight stop. You're giving the market no quarter at all because it can really snap back on you. Well, eventually, that's what happened here. You got down to the lower band. You're getting a big rally. Now today you fall to the lower band. If you have my morning research, I wrote, expect to see support today at the lower Bollinger Band in the key indices. You got down here, as you can see, to that lower number, and you bounced away from it nicely, 30 points by the end of the day, and you're still over it. When we come over here and look at momentum, you're oversold. So we have a market that is number one in a break, but not in a trend, not defined by lower highs, lower lows. It hit the lower Bollinger Band on a big move to the downside, and from that move, we're getting a little bit of a bounce. Doesn't mean it has to bounce away a lot. You're not trending. You've got a momentum trade to the downside. In the NASDAQ, we don't have enough days for the NASDAQ December contract to plot the 200-day. I wish we did, but there isn't here. I ran the number. But you've got the higher high. Well, actually, if you take a look at this, You don't have the higher high. This high was 11,554. You then break back and you come up, and this high right there is 11,539. So you have lower highs. You've now setting up for the lower low in an oversold condition right here. Did you reach to the Bollinger Band? This is today. Just missed the number, and you're getting a bounce from there. If you hit it, fine. You haven't hit a lower Bollinger Band since March in this market. Go back and look at your charts. I was looking to see if that. And it is very rare that even in the cash, the QQQ or any of the other parts of this that you watch, that you get down to a 200-day moving average, and that's been for quite a while. This is still the strongest innately, and the reason you snapped back today was probably bargain hunters coming out into those FANG stocks. As we look at the Dow had a pattern coming in even of a higher high here. Higher high, right? Higher low, and staying. With what? Under the 18-day average. Bias is important. You can get a swing line pointing up, but if the bias doesn't go with it, you're not getting a buy signal. And that kept that from the market. The battleground became for days the 18-day average of closes. The question was what was going to be. This is Friday's action. Today you hit the lower Bollinger Band. You know what I'm going to tell you. I think the pros are, if they are short, and I don't know why they're short or not short, that's a zone where I think you're getting a certain amount of short covering. If the market wants to drop further, 26,208's a number, but there's no trend. This was a momentum trade again to the downside. In the Russell, you had the same problem. You had one day where you closed over the 18-day average of closes. But if you bought this market here, and I had pointed this out to my subscribers, that's a heck of a risk you got to take all the way back to that low. In other words, monetary risk is extreme on that. And I said it each and every morning that I've been putting out that for them, warning them on that, and boom, I was right. When risk's too big, it's another part of your trading tool chest that you go, there's something not right. Now, the 200-day average in gray is right here. This is the Bollinger Band. That combination, along with the 100-day, is pretty stiff, solid support. We'll see if that holds the market, but it typically does. That does not mean I'm saying you're going out and buying it. There's a difference between the words support and buy. In the VIX, all you did is pull back to the 18-day average. This morning when we were dropping, I said, I don't think the VIX is going to run that hot. I said, it's got resistance up there, and that's exactly what it did. This market's not in a panic mode is what I'm seeing as a chartist. When we take a look at the bond market, we had this outside day down right through here. That's your outside day. If you take that out, the odds favor you're going to the closest moving average above the market or the Bollinger Band, the closest of it. Went right there, and it's really been in pretty much a stall ever since then. It's not giving you a trade setup, even with the craziness that happened here. In the 10-year note, you got the higher high, lower low pattern sideways. No trend. I realize the market's got bids today on the fear, but that's what it was, a fear bid. You're not trending in the dollar. The first thing the dollar did last night, if you look at the open, was it opened, fell to a low under the previous low of 92.79. Then, as the panic morning got going on stock indices and others, the buying came in. Where did the market culminate its rally? Right where it should, the upper Bollinger Band. It's overbought, not in a trend. I still see sideways action there, which tells me if we break further in the euro currency, the same thing here. So when the euro today drops down to the Bollinger Band, my thinking on it immediately, oversold, that's where the pros are likely to cover shorts. And right now, at least, that so far is the case. Have you come out of this sideways action? No. Can we determine if this is a top? No. Or a base if it breaks out? Not yet. You're still in that sideways pattern. The British pound you would expect would get bad news off of the combination. They're not really making any headway as I see it with Brussels on the Brexit. And then, of course, another lockdown can't be good news. And that hit this market and hit it hard today. It's already oversold. It's not even gotten to the 100-day average, but the trend is down in an oversold condition. Bitcoin. I came out this morning before this market fell like it did today, and I was telling traders, I said, you know, I'm seeing a top form. The market had gotten under this. I said, I think the pros are hitting this market. Maybe you can get down to the 100-day. I didn't expect it today, but it hit it and it's bounced away from it. Trend is still down until you get back over 11,075, and I would expect to see sellers at that 18-day average of closes. The differential between November, Brent and WTI, no impact off all this today, still trading at about $1.89 sideways, and the 18-day average has proven to be a resistance point on this whole rally back up on the energies. It's now getting itself caught between the 100-day average and the 18. The trend is up, but the bias is not. You're staying under that 18-day average of closes. Same in WTI crude, identical pattern here. So while the swing line's up, you're not getting confirmation on that signal. Gasoline is just fighting at the 18-day average of closes in a pattern that has a lower low and a higher high. I don't call that a trend, and you've pulled back, and that's about where the market normally builds a trend from. And you have, in the momentum of the nat gas, you're starting to move up, so maybe you can get a little bit into this area, but I doubt you've got enough momentum here yet to get back over that 18-day average of closes. That still looks formidable. To break the current downtrend, you've got to take out 277.5. Again, you rode the lower Bollinger Band, you never did embed, and the market got a bounce off of that. I want to remind you, we write about these markets at Linn Associates, and we write a lot of information on them. I don't care if you're trading options on futures, if you're trading spreads, if you're trading the futures markets. News, research, is a currency in itself, something you might want to take a look at. And we've got a group of pros that write this. For those of you that are grain traders, for example, we have 2 meteorologists on staff. And we're telling our people what we're seeing with it. We cover all these markets. Doesn't matter if it's financial. David Hightower, one of the analysts with the Chicago Mercantile Exchange, broadcasts 3 times a day in our charting platforms just for us. So we have quality people with the research. I think I'm a fair market analyst myself, and I give a lot to my clientele. How do you find out more and get it for free to give it a try? Go to our website under free offers. It's all there, or call my staff. They'll help you set up like that. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.